Welcome everyone to another installment of Trader's Edge. Today we're going to talk about currency option volatility. The traditional way of looking at volatility is most people look at a chart. They look at a 3-year, 2-year, 1-year, 10-year chart that shows implied volatility over time. And you can see from this one, this is options on Japanese yen. This is the volatility, the at-the-money implied. I always tend to use the at-the-money implied because that's where the most liquidity is and that's where the action is. You can take volatilities across any strike, any skew you want, but I tend to use at-the-money. So you can see here, in general, you can see on the low side volatility somewhere around 6.5%. On the high side, it's around 15.5 to 16.5%. And that gives you some inkling as to what the highs have been in the last 3 years and what the lows have been in the last 3 years. And as you know, volatility is a very important component of options pricing. You can have the strategy right, but if you get volatility wrong, it's going to lead to suboptimal results, as I always say. The next chart here, same thing. It's just instead of Japanese yen, it's the Euro FX. So again, on the low side, about 5.5. On the high side, around 15–16%. And again, you can see the highs and the lows. There's some granularity there, but it's not really the truly deep dive that you want. Same thing with British pound. And this is it. We're not going to go through all the currencies, only the 3 major ones, 3 of the top 6. And you can see British pounds, it's a little bit skewed there back to 2016, so the scaling doesn't look as attractive, only because of what happened in June of 2016. And for those of you that remember, that was the Brexit announcement when Great Britain decided to leave the European Union. Volatility tripled. But in general, volatility is in single digits, is on the low side, and then anywhere between 12 and 14% on the high side for sterling. So as a result, you can look at these things and kind of, gather a little bit, in general terms, from 37,000 feet up, what high volatility is and what low volatility is. What we've done here, though, at CME Group is taken the data and we've drilled down a little bit more so we have more granularity. And we converted these data points on this chart using an Excel spreadsheet, a rank and percentile generator, and we rank these according to percentile rankings, just like on standardized test scores, where you get a raw score and you get a percentile ranking. If you got in the 90th percentile, you beat 90% of the people that took the test. If you got in the 10th percentile, you only beat 10% of the people that took the test, and 90% beat you, and you might want to take it over. So as a result, we took these data points, and instead of test scores, we ranked the at-the-money volatilities every day, and we did this rank and percentile generator. So you can see here, this is in the euro now. We're back to the euro only. And you can see here, we're going to look at how cheap is cheap, what's really cheap, what's historically cheap, and the same thing on the high side. And more importantly, what's the impact on options premium? Namely, in this example we're going to use, what's the impact on straddles? So you can see here, the highest that's traded in that 3 years ending June 24th is 15.44. The 90th percentile is 11.65. 75th percentile, 10.05. So on down the line. The lowest for the last 3 years is 5.13. The current volatility in the euro is somewhere around 10.5%, something like that. So 10–10.5%. We're roughly around the 75th percentile, a little bit higher. So we're running kind of high. It's been higher. It's been much higher, but it's also been much lower. But in general, you want statistics to work in your favor. When you're in the higher percentiles, volatility doesn't tend to stay there very long. When volatility comes down, the premiums compress. So as a result, you can see the at-the-money straddle there. You can see at the very low over the last 3 years, the straddle would have cost you $1,700. In the 50th percentile, the straddle would have cost you $2,787. At the very high, the straddle would have cost you $5,162. So you can see there's a huge difference there in the impact on premium. So the one thing you want to do is keep an eye on volatility. Use this as a tool to screen out trades that might be bought in the wrong volatility environment. Anyone knows the strategy. A lot of people, you learn the strategies, but you got to align yourself with the correct volatility environment. And the last chart we're going to talk about here has the yen, the euro, of course, which you just went over, in British pounds. Current volatility in the yen, again, is at around the 75th percentile. It's around 11%, 11.5%. The euro is around 10–10.5%. The Great British Pound is around about 7.3%. So that's running very low. Sterling is running very, very low. Euro is running a little bit high, and Japanese yen is running a little bit high. So again, you can use these things as they can screen out trades for you. So when volatility is in the lower percentiles, it's probably a better idea to get long options. And the crux of the matter is, if you're going to be wrong, if you buy an option, if you're long an option and you're wrong, I'd rather be wrong in the 10th percentile than the 90th percentile, because you'd lose a lot less money. Okay, so as we conclude, I just want to say, do your homework. When it comes to options, you must do your homework. They're four-dimensional instruments as opposed to two-dimensional instruments, and good trading to you.